Hey everybody, welcome back to Markets for Millennials for the weekly market wrap from December 6th through December 10th. Took last week off, and I will actually also, public service announcement, be taking the final 2 Fridays of 2021 in December off. Obviously, that's Christmas Eve and New Year's Eve. I will be taking a few weeks off for the holidays. I will not be posting any content on YouTube, but if you do enjoy the work that I do, you are free to follow me on Twitter at Mr. J. Thomason, and and I will be posting periodically. I post various charts and things on Twitter. Recently posting Bitcoin update, which is actually since outdated. And so I will have to update over the next few days what's going on. But this is the weekly market wrap. It's not just Bitcoin, although I have put a lot of focus on that as of late, and I will talk about that a little bit in this update. But just want to start out here on the DXY, and I just want to explain what I'm doing here. I previously, if I darken this line for you to see, I had this channel for quite a bit of this year, ascending channel trend line. We spent a lot of time on the lower end and have since come up and broken through. If I darken this other side as well, you would see that, but I'm going to keep it light because I actually don't want to see this line anymore. I'm keeping the lower band because we have yet to break to the bottom side on that. But I have a couple of different things going on here. I typically watch the 8-hour time frame, which if you don't have the 8-hour time frame, you would, on your trading view, come up to the little arrow at the top, and then you would scroll all the way to the bottom, and you would have to add the 8 hours. And you can only do that if you have more than just the basic account. So just letting you know there. But typically I watch this on the 8-hour, but my trend lines I draw on the daily chart, and I only will make adjustments if I go to a smaller time frame and see that the market is actually respecting the line a little bit differently than what it looks like on daily. So what I've been doing here is I've kept the bottom because until this breaks to the downside, this is kind of the lower trend line that is being respected by the market. But what I did here is I drew these lines in yellow. These are cloned trend lines. I drew the trend line touching these wicks, these red wicks, and what you see is that the market actually, you see it was resistance, resistance, resistance before popping through, support, and then came back down, and the market has been respecting that. It's touched it only once right here, but if I go down to a smaller time frame, you can see more precisely that the market is respecting it. So I am keeping it there for now. I suppose if I really wanted to, I could even drop it down because I want to touch different trend lines or different wicks. If I want to touch the August 20th wick and I want to touch the bottom of the November 30th wick, and you would see that it looks like that. It actually looks pretty good, so maybe I will keep it that way. This is me doing this in real time. But anyway, I have these because it seems like the market is respecting this kind of structure, respecting those trend lines. And so it's entirely possible that we are still going to stay in an uptrend for some time. But what the market is actually looking at now is following a slightly more shallow uptrend. And actually, other than this one touch, and I cloned the line as you saw me do in real time, and I just put it on the top, and you can actually see it touches both of those wicks perfectly. So that's currently the zone that I'm going to watch. And then what I've also done is, again, on daily chart, if I go a little closer, I'm trying to connect these red wicks. So I've got the top of this little red wick and then this red wick. But obviously, if I go down to a lower time frame, you see that we popped above it on the 8-hour, again touching that trend line. But the reason why, in general, it works regardless, I'm watching a couple of different things. If I turn my magnet off, I'm watching this ascending line. That's supposed to be yellow. Wow, I've just got this all messed up today. I'm watching this ascending line, to see to what extent the market will respect this to the upside. Are we going to hit this confluence maybe right about here and then bounce up again? I'm wondering if we're going to hit that, or if it's going to come to a point where we do end up hitting the lower trend line right here. Are we going to stay in this range? And over the next, maybe over the next 2 weeks, probably not. We might not have clarity next week, but then we might. Like for example, if we pop up above and we bounce down off that yellow trend line, then obviously that's going to give us a clue. But I'm watching this consolidation within this little pennant pattern. And then I'm also watching price within kind of this larger pennant. So looking at kind of two pennants or two triangular formations, because I'm interested in seeing where the market is going. After some pretty solid moves up on the dollar, a lot of people are looking at the Fed meeting next week to kind of see what's happening. So for me, it's no surprise. Ever since we had over the last week or two, we've been consolidating right in here in this range. So I think the market is waiting for what the Fed does after its meeting next week. That would be Tuesday and Wednesday. If I look at my calendar, looks like it's going to be the 14th to the 15th, and obviously the 15th is the press release and the press conference. So that's something the markets are watching. And the question is, will we get stuck in a range here, or are we going to get a decisive move up or a decisive move down? Now, the markets like certainty, and so I suspect that as long as the Fed does what is expected, which I think the market is expecting either a continuation of the current taper pace or perhaps even an acceleration of the taper pace. So what I'm thinking is, on the dollar index, if the Fed comes and does basically one of those two things, which I think the market is expecting, then I think the uptrend continues. Not the least of which is because tightening means the dollar is more likely going to strengthen against other currencies, other fiat currencies, which is what the dollar index is measuring. Not the least of which will be because of that, but also because in this, this is a at least a near-term dollar, maybe bull market. I don't know if you want to call it that. I'm not sure that I'm willing to call it that exactly, but a bull uptrend for sure on the dollar. I suspect that that'll continue. I think if we get a surprise, and I think the market will be more surprised if the Fed moves away from its taper or reduces the taper amounts. Then I think we would end up getting the dollar to come down, and that would definitely get a breakdown there. So obviously, the smart thing to do going into next week is to set as few to try to not set any new positions. Wait until at least a day after the Fed meeting to consider new positions if you're trading foreign exchange, and then obviously whatever happens with the Fed is going to affect not only the dollar but also yields, which for a good long while have been trapped in a range. And I've tried fiddling with this a little bit. What I ended up doing is connecting the low from August and then our wick low from this August. So that was August 2020, August 2021, and it turns out that it hits the wick on the December 3rd candle, hits it perfectly. And then what I did was, some of you guys who have been watching, you might remember I had a flag going this direction, and then I added trend line here, trend line here. Obviously, those aren't exact. And then what I've done now is I've drawn a line connecting the wick from March the 30th, and then October 21st and 22nd, and then it's barely above the top of the November 24th wick. So we've been trapped essentially in a sideways range, for most of the year. And to me, something's got to give. Maybe it's going to be another few weeks before something gives one way or another. If you remember, I've long said that I don't think that the market can handle rates getting up close to the 2 range. I mean, in the real world, they should be able to, but the market is addicted to low rates and QE and all that. So it's hard to imagine the markets at this point being able to handle a move up past that point. And so obviously everybody's going to be watching and waiting for what happens in the Fed meeting next week for yields as well. I don't have a bias one way or another. I have, on a couple of occasions, talked about believing yields could go higher, but I'm not 100% sure. It really just depends, and I don't have a bias either way. And when I am not certain or when I don't have any conviction, I'm just going to stay on the sidelines. So because of that, when it comes to things like gold and silver, which are very affected by yields, I will not be setting new positions or considering new positions until what's going on with yields really shows some direction. So what that means is anything I'm holding, investing in, trading, any current trades that I have open on things that would be greatly affected by yields are going to stay as they are. Obviously, you have to do all your risk assessment and stuff ahead of time. So anyway, I won't be taking anything new until this really resolves itself. So any positions that I already have in any of those other areas are just going to stay as is. And I have my stop losses and all that set. So speaking of gold and silver, so we'll take a look at gold first and then silver. Gold has been trapped for just so long. It's pretty crazy. We're at, here we are closing today. We closed at 1782 and 87 cents or so. Gold has had a couple kind of ever since it did this little double bottom here in March of earlier this year. It had this really strong move up and then has since given back quite a bit of that. And every time we've had a solid breakout, or what seems like a solid breakout, like most notably, let me just take a look here. So these lines that I'm darkening up are showing you where I believed the best breakouts were. So this breakout right here, you saw we got above. Those were cloned trend lines. Then finally breaking out above this, retesting it and resuming off. I thought that was going to be pretty solid, but obviously it has come back now. I mean, technically we're not below, so what you would have done here on this breakout is a smart thing to do would have been to set your stop loss there. So if you took a trade, like a smart trade, then technically once this resumed out, like your trade is still active, but it's, gosh, where would this trade be? If you got any of these trades, you would be slightly at loss or perhaps right around break even with your stop loss still intact. So trade could still potentially be open, but it's just not doing anything. But again, if you've got the trade active, you just sit on your hands. You got to respect your stop loss, and hopefully you positioned your position size was chosen correctly. But yeah, so yields have been kind of sideways. Gold has been sideways. Silver has been sideways, although we have once again closed below a pretty important level. You see that this level has been significant back in September 2020, November 2020. We wicked down to it in August of this year. Had a brief close below in September, and then we got finally above it again, and we're back down below. This is not a good sign. We are getting to, once again, the lower bound of, what's been happening of the price range. So obviously here is our price range. It's not exciting. And the longer that, there's two ways you could look at it. This either is about to, silver's not in a bear market. Maybe some people are saying gold is in a bear market because of the retrace. I don't know. But silver is, both of these are consolidating for so long that you would think that when the move up happens, it's going to be quick. And I think that you could look at previous eras. I mean, look at how long silver was sideways. Look at this range, right? And this came after, coming down during its height in April 2011. So if you think about that, like, look, you came down and then look at how long this traded sideways. I mean, the range, the whole range lasted, what is that, like 6 years? So, I mean, this could go sideways a really long time. And who really knows? And a lot of this will depend, again, on what the Fed does and what yields do. And obviously, there's all that discussion about manipulation stuff. I think that earlier I said that there was either two choices, and I forgot exactly what I said or didn't say. But suffice to say, this is not exciting. We got to wait for a significant breakout before we can get excited about any of this. And I'm not yet, so that's where I'm at. While we're looking at commodity type things, we'll take a look at WTI. As you can see over the last, since the high in October, we've just had just this awful sell down. I don't even know exactly what this drop was from wick to wick, over 26%. And it has retraced a little bit, but we are bouncing off of some resistance here. And looks like we came in for a little retest on this support line. And what's interesting, I mean, I don't know if you've noticed as you've watched these charts that I've been doing the last couple of weeks, but a lot of these lines, these support and resistance lines, have been there for months. My gold and silver lines have been there for over a year, and they are still like demonstrating that the market is respecting them. And I tend to think on a lot of commodities, you're more likely to get that price action that is bouncing off the horizontal and the horizontal resistance and support levels, rather than necessarily just the trend lines themselves. You do see that they obviously respect those as well, but hopefully you get my point. Anyway, so that's a little look at the commodities, and then we'll take a look at the equities briefly. I've made some changes to my chart as of late, my S&P futures chart. I've connected the September 2020 high with, obviously you can see where it's provided resistance all along the way. And then I've got the lower support, which is coming from the March 2020 low, and obviously connecting October 2021, December 2021. It's providing really solid, strong support there. Depending on where you want to set it. If I set it at this wick, then these wicks are not totally touching, but it still works. I like to go as low as possible or as high as possible to keep myself safe. And after what a lot of people thought was going to be the end of the world, which was only a 5% correction, has almost fully retraced and actually is closing higher than it has closed ever. So there you go on that. What do you know? S&P at all-time highs closing. Not quite on the NASDAQ. What I'm looking at on the NASDAQ is I'm wondering if, obviously from this flag formation, we've got a breakout, and then it looks like this red wick or this red candle is the retest. We did not get enough follow through to really call this a resumption, but it is something that I want to pay attention to going forward. And honestly, like if you're trading, then you have to be a little bit more strategic. But if you think about it, like how many places along here could you have freaked out? You could have freaked out on the 10% here or here. If you were able to hold through the bear market from the March crisis of 2020, look at how far you've come. Even from the top right before the COVID crash, our current price is over 60%, 67.7% up in 18, 19 months, which is insane. Okay, and that's with a crash. That's with this this crash that was down over 30%. So on equities, the name of the game, is you take a you take a long dated position, and it's going to be higher. So I mean, how many different ways do you have to look at it? I mean, look at the monthly chart of the Nasdaq. I mean, if you log scale it, like there you go. I mean, it's just 45 degrees, give or take, up and to the right over time. So taking a look at the Dow, we did get a breakout. I'm using these red wicks as my guide. We did get a breakout and a retest, and we've closed higher than these candles, but not at all-time highs yet. So the Dow is looking strong. We've got this horizontal resistance. We broke back up above this old resistance, which now should be support. I'll darken that or lighten that back up. So again, it shouldn't be long if we get the follow through. I'm actually looking for, both on the Dow and on the Nasdaq, I'm looking for some good follow through to really confirm that price will continue to go up. The Russell has been a bit of a disappointment, but I just want you to see here these lines that I made. Definitely this lower trend line has been here for over a month. If I put it in, I don't even know how long ago. I'd have to go back and check my content to see. But it provided almost perfect support. The wicks didn't touch, but it came down almost all the way to it. But the Russell's been super disappointing because, this prairie dog, I don't know if you would call it a prairie dog formation, but it popped above the resistance and then basically sold back down. And we're essentially just waiting for, the confirmation that this trend to the upside is back on. And I'm turning the magnet on because I think I actually want to put my line right there. Maybe I'll do that. It's an art, it's not a science, so you're more than welcome to disagree with that. But once again, though, with the Dow and the Nasdaq and the S&P close to all-time highs, well, S&P is at all-time highs now, closing in terms of closing prices. The Russell is back exactly where it was, almost exactly a year ago, and so for the whole year. So that's disappointing to see on the Russell. It does give me pause, but not quite enough to make me think that there's any sort of crash impending. It's possible that on the equities we get the double top, but I mean, how many places along the way did people call double tops and say that price is going to roll over? And honestly, I'll believe it till I see it. If the Fed increases its tightening or rapidly expands its tightening, then maybe you're going to get this market to sell down. So there's a couple of days left for price to come back up and make that true double top, but I'm not counting on that. I'm just waiting and letting the market show me what to do. In my book, like before taking any new long positions, I mean, the smart thing to do, obviously, if you're trading on shorter time frames, is to do something like this and get that resumption. But if you're, long-term investing, I mean, you just buy, close your eyes and buy. But I personally, I like to buy when there's fear. So obviously that would have been more recently, but I'm looking for a bigger correction before I'm willing to lay any new positions in. So taking a look at Bitcoin now, I mentioned I had this thread, but what kind of where I'm at now, you can see I've got some alarms set for these trend lines. What I was looking at was on linear scale connecting the what we were calling the mid-cycle low, the wave 1 low, and I was hoping that the lowest we would go is on this the touch of the trend line here, which is approximately at the spot of around the wave 1 high. We wicked to it, and I thought we were going to keep above, like close above, and we did close above, but then we just continued to come down. And the part that's concerning to me is, and I'm not bearish on Bitcoin in terms of like the big picture and the overall thesis on Bitcoin, but in the near term, I am concerned. I'm just being honest, because in terms of the technical levels, everything that I was watching and that I was thinking would play out bullishly has actually gone the other direction. So So that's where my concern comes in. I did see a couple of people doing some things like, let's see, it was like this. Let's see if I can do this properly in real time. People were trying to paint like megaphone patterns. I don't know if I can do this in real time as I record this. But a lot of people were looking at stuff like this and saying, "Oh, we're getting a megaphone pattern, and if it breaks one way or the other, it's going to go crazy." I wasn't watching that. Um, the technical levels I was watching for, like there were a couple of things that are cycle related, like usually if this is truly wave one, wave two, previous price history on Bitcoin never closed below the wave one high. Obviously, it has now. So that was one thing I was watching. Let me get rid of this for a second so you can follow my logic here. For a while, I was watching. I had set up this wedge pattern. I had made a bull flag and I made a wedge and I had posted on Twitter, is it a wedge or is it a flag? What is it? And I leaned toward keeping the wedge. So again, I watched typically on the 8-hour. So what I ended up having done, and this, I think something went wrong with my little chart here. Basically what I did was something like this. And so going back to my daily chart, it looked something like that. And however you want to slice it, I was looking for this to be a bullish pattern, very similar to what was going on here. And this is going to be kind of a messy drawing, but something like this. And I was expecting it to break up like that. And so I was biding my time, and that broke down. And then, so I was looking to see what would happen on the retest, because this a week ago today, this price action, like this was crazy. This reminded me a lot of what happened over here in May of this year. And so what I was watching was to see on the rebound, on the reflexive rally, if we would test and break back through and come back into the wedge, or even break above the wedge, if we were going to get a V shape. And it almost looked for a couple of days like we were, but we hit this the lower end of this wedge and then actually resumed down in terms of closing price, not in terms of wicks, I guess, if you want to consider this the where you'd have to resume below, but definitely in terms of closing price, we resumed down. And then I went back and I darkened this line back up that I had, and it was not on my chart for some time, or it was not visible on my chart for some time. But if you look, there's a perfect confluence there. And so not only did we break below this wedge, we broke below the lower band, the lower support of this ascending trend line, and retested it at the exact same spot and resumed down. And so, and we've had a couple of different instances where price looked like it was going to come back to the upside, and it just continues to fake everybody out. And so looking at the 8-hour chart, like we closed the 8-hour chart below even the December 3rd 8-hour. And so it's not looking good. And I could totally see a situation where, like I haven't quite picked my levels yet, but I'm thinking that, worst case, well, not, I shouldn't say worst case scenario. I'm thinking that what we might end up seeing is, a test somewhere in the 40,000 to 45,000 range. That would be my guess. But obviously we could come down lower. I mean, price is going to do what price is going to do. And, in no way am I saying that, I don't have a crystal ball. I don't have any way to know for sure. But it doesn't look good near term. Big picture wise, obviously, if you just zoom out and you log scale this and make it align so that it's easier, obviously, what are you going to say about the chart in the long term? So long term, I'm fine, but in the near term, this is, obviously something that is not good. It's not a good development on Bitcoin. And who knows? A lot of people soul searching. I myself am trying to look at how I can adjust my view on Bitcoin to see what's going to happen. It's part of the reason I haven't posted any Bitcoin specific videos or any GBTC updates yet in some time, because I really got to kind of look at what the market is showing and try to make my best estimate of what I think is going to happen and allocate any capital I have accordingly. Have to be willing to consider what trades do I need to back out of, what do I need to sell, and so that's going to be something that I'm looking at, and everybody should too. And as you can see, today actually ended in the red. The December 10th candle on the daily chart down $450, when at one time it was up over 2,000, and then today we are already starting off down on the new on the weekend December 11th candle. So not looking good, and I don't mean to be pessimistic, but this is where, obviously if you got in early, then you're in a position of strength where you can afford these drawdowns and still come out on top. My positions are, multiple X higher from where I started them, so that's a position of strength, and so. But obviously got to be realistic about where things are. I don't believe anymore that price will peak in December. I'm looking for possibly a mid to late January, or possibly mid to late February. And I would actually encourage you, if you're interested in some of my original analysis. In my original analysis, I actually considered the possibility that we could get a peak in like late February, sometime around this period of time on the calendar. You can see down here at the bottom. And I talked a lot about that in a video that I made. It's in my playlists on Bitcoin. It's called My Original Bitcoin Analysis. And so if you check that out, you'll actually see that where my starting point was. And I actually, if I just go back, my original Bitcoin analysis was done back here in like September, October of 2020. And I was looking at price to peak as early as, I didn't think that it would happen in June or July, but that was the earliest point. And then my second choice was in mid-October. And then my third choice was in mid to late February. And so it looks like that could become more and more of a possibility. Will it end up being right in the end? I don't know. Nobody knows. But I do want to be always aware of multiple vantage points, multiple possibilities. And most importantly, and this is for anybody watching, never be married to any particular view. You have to be fluid and be willing to change and adjust to the market as it shows you. And so obviously that's why you have to be careful and understand what you're doing, when you're doing it, and why you're doing it. Because otherwise, to do anything else would be to set yourself up for failure and for loss, and that's not something that you want. So that's the update for this week. Thank you for watching. If you thought this was enjoyable and you learned something, go ahead and like and subscribe and share with a friend, and I will see you guys next time.